Okay, and there are lots of pros in favor of this strategy, and just to really name but a few, it's first and foremost, it's a unique blend of both fundamental and technical factors. We've got not only the context in our favor, but also technical reasons too, which obviously gives us a much higher probability outcome for that, and bearing that in mind. Okay. With this strategy, we also have a variety of entry and management styles, depending on what kind of profile of trader you are. You might be somebody who's very risk averse. That's absolutely fine. There are ways in which you can profit from this. Or you might be someone who's quite gutsy and quite ballsy and appreciates that where there's risk, there's reward. Well, guess what? There's certainly a methodology for you as well with this. Okay, the great bonus about this, of course, is through treading this strategy, you'll be on the side of the market, which the biggest players in the market are as well. These central banks, they are the 10-ton gorillas making the moves or making the waves, and we are the little monkeys looking to basically scoop onto any move that's made. Us retail traders, we aren't the ones that make the moves, we're the ones that follow them. And if we've got an edge in the market and we know what way a central bank is actually trading, then we can hop onto that trend and do very nicely, thank you very much. And when they do announce, as we'll discuss in a minute, that they're defending levels, then we've got an extremely high amount of probability on our side. Another great thing is there are less rules to entry. You know, sometimes it can be frustrating when you get these strategies where there are 100 rules for entry. Sure enough, it eliminates the losers, but then you find yourself never trading. Well, even though this trade doesn't happen very often, there are very few barriers to entry. The reward potential is huge, and it really does reflect simplicity to its highest degree. It doesn't require any magic box indicator systems or anything like that, or that hocus pocus. It can be traded very objectively and on the hard time frames as well. Essentially, you can just set and forget, no problem. The flip side of this, I always want to give the other side of the coin because, of course, nothing is perfect. And I obviously like to make sure that you know or fully aware of the kind of the downside as well. There isn't much of a downside compared to the pros, to be perfectly blunt with you. You can see that there are few opportunities. There really aren't that many. And the fewer rules to entry could provoke a fear-based disposition. I know some people do like to have a lot of rules before they jump into it, or sorry, not jump, enter into a trade. Okay, so this strategy really does hinge on what the big dogs are doing. The central banks around the Western world, in brackets, of course, a lot of countries out there have central banks. We're only really interested in the Western world banks. And the reason is simply just because they represent the major economies and the currencies which are associated with them. And this is, of course, the European Union, that trading bloc, which, well, we're certainly in, despite what Nigel Farage thinks and wants. The Federal Reserve representing America, we've got the European Union and the ECB Central Bank, European Central Bank, the Swiss National Bank, the Reserve Bank of Australia, the Reserve Bank of New Zealand, and the Bank of Japan. These are the main banks which we can really peg to currencies which are popular pairs or popular crosses. And of course, you know, we could trade any other central bank. A lot of other countries have a central bank, like the Central Bank of Vietnam or the Central Bank of Afghanistan. But quite frankly, those currencies aren't particularly liquid. And I'll be honest with you, I've never actually looked at the chart of the Vietnamese dong before. However, I'm not saying that you shouldn't trade it. I'm just simply saying that we only really pay more attention to these central banks representing Western world economies, ones which have the clout behind them to really create the moves. They've got deep pockets, and when they say they're going to defend a level, then they really will be defending a level. They're the biggest players in the markets. And central banks, well, they are big influencers in the markets, not only from the domestic standpoint in interest rate setting and adjusting the base rate to help regulate or stimulate economic growth. The other reason is the reason which we are very interested in taking advantage of the central banks, and this is looking at the levels which they pledge to defend or even state that they are going to keep an eye on at defending. Okay, because frankly, if a central bank, like I just mentioned, says that they're going to defend a level, then they really do have almost limitless means to defend that level. And when they do that, we should get very interested in not getting in the way of their trade, not going short into a level which they've said that they will defend and push the price up. That's the last thing we want to do. We want to do the opposite and go with them. So if they've said they wanted to defend a level and stop, say, for example, if the Swiss National Bank have said that they want to prevent the euro from getting stronger against the Swiss franc, and they'll buy the euro at any cost, we don't want to sell the euro on that cross bet. I'll discuss more a little bit later if you're lost. So what you're probably thinking, whatever. And you could be completely forgiven for thinking that. So how are we able to profit from this? Well, what we're able to do is essentially piggyback these big players in the market, these central banks who've got seemingly limitless resources to prevent price from moving through levels they've pledged to defend. Okay, so if price does come down, and we will look at examples, by the way, I'm a very visual person and I will give you these visual examples. If price does come down to defend a level, we can buy just above or on the level with a stop below it. Or if price does go up to test the defended level, we could sell just below the level with a stop above it. In fact, we can essentially take advantage of a previously tested technical level, which a central bank has pledged to defend at all costs. So in this case, we have, not only do we have fundamental reasons behind our trading decision, i.e. the fact that a central bank have decided to defend a level or protect a level, we've also got a technical reason behind our trade as well, i.e. the fact that a certain level might have been tested. So when we're talking about the defended level now, we need to ask ourselves with this strategy, sure enough, it's okay if a central bank turns around and says that they're going to defend any given level in order to keep the balance of payments on their country or keep their exports competitive. But will it actually correspond with a technical level too? That's the burning question. And this is something we need to be very careful about if we're trading this strategy. So on one hand, the central bank might have pledged to defend a level, but is it a technical level? Well, this could be a level of support or resistance, which has had at least 2 prior touches. If we've got the central bank saying they will defend a level and it has 2 previous tests, then fantastic, we have a bona fide trade set up. If not, then we don't. Simple. We just walk away and find something else to do, whether it's walk our metaphorical dog or find a hobby or an interest. I've got plenty, and I encourage you to do the same rather than trying to look at the market and trying to think of ways to get into it. So one could say we've actually got the perfect storm with this strategy. We could trade on the daily and the weekly time frame. We could simply place the orders up and walk away and go on holiday and not care and just simply let the market take its course of events. And we've also got fundamental and the technical argument in our favor as well, like I just mentioned. Okay, so we've talked about selection, timing. Well, in terms of timing, selection, and management, the key elements of a strategy, then I just want you to ask these 3 questions when you're doing your independent analysis. Do we have a level defended by a central bank? Yes or no? Do we have a technical agreement, i.e. a level of support or resistance with at least 2 previous tests or touches? And yes or no? Or is price action heading towards this level or not? Yes or no? If the answer is yes to all these 3 questions, then we have a valid trade opportunity. Hooray!